Hey folks, Juan Macheco here, President of the Florida Real Estate Investor Association, bringing you this week's edition of The Fan, the Florida Action News. And before we get into our headlines, I want to wish you all a very Merry Christmas, and for our Semitic brothers, a very Happy Hanukkah. Enjoy the holidays, and be careful out there. We want to see you again next week. All right. Also, I want to thank everybody for coming out to the FLREIA Elite Annual Christmas Party. We had a wonderful time, as you can see here on the video. And thanks for all the great presents for Urban Youth Impact. We made quite an impact on them, as this helped get them to break their goal for the year. So a lot of underprivileged children are now enjoying presents this year, and enjoying the holidays with a gift. So thanks to all you guys for bringing those in. All right, and so let's take a look at the headlines for this week. Mortgage delinquencies are rising. Mortgage debt contracts. Big money sales. Mega-Condo project pulled. Flagler Bank falls below capital requirements. And the Miami Dolphins. All right, from dsnews.com. Let's see. Mortgage delinquencies are rising. That's right. The Lender Processing Services has released a new data that detailing the mortgage performance at November month end, showing a nearly 3% month-over-month increase in the number of loans 30 or more days past due, but not yet in foreclosure. 8.15% of the nation's mortgages fell into this category as of the end of November. That's up from 7.93% at the end of October. And that's a 2.7% increase. So this is the first reported increase in 4 months. So we have, for the past 3 months, we had been reporting that we were seeing drops. Now they're seeing an increase in delinquencies. But annually, the stats look a little bit better, as November's delinquency rate was 9.6% over last year. Okay, so that's a good thing. But the troubling thing is that we're seeing an increase again. So hopefully this is just a small hiccup in the economy. But anyway, as of November, there were 1,809,000 properties on which a mortgage payments were 90 or more days past due, but the case had not yet been referred to foreclosure. Now, the number of properties in this foreclosure stood at 1,759,000 in October. So it's quite a bit of properties in trouble. Borrowers behind 30 to 89 days did, however, dropped to 2.39 million from 2.79 million. So that's a good thing. But in total, 6.26 million borrowers were behind. That's 1 in 8 residential mortgages, not including commercial. That's 8 residential mortgages are behind. So we still got a little ways to go to get out of this slump. So we'll see what happens. Hey, it's an election year. Make sure you are registered to vote, as we need to take care of cleaning house and make sure that we get the right people doing the right things. All right, mortgage debt contracts. That's right. As from the Federal Reserve, they've seen the grip on household wealth and capital flow. Yeah, the total sum of home mortgage debt in the U.S. has dropped to its lowest level in nearly 5 years. Outstanding mortgage debt contracted by 1.8% over the third quarter period to $9.88 trillion. Yes, that is a T. All right, and then the Fed's latest report shows that household net worth also took a big hit during the third quarter, losing $2.44 trillion, making it the largest decline since the Lehman Brothers collapse in September of 2008. So a little bit rough waters here in the third quarter. The value of real estate assets actually rose $102 billion, but volatility in the stock markets did depreciate the financial assets by $2.66 trillion. Household wealth is expected to rebound by just under $2 trillion in the last quarter of 2011, as stock markets have recouped most of their losses in their late September trough. All right, from Daily Business Review, here's some big money sales. Listen to this. $10 million condo sale. All right, not one condo, but an investor did pick up 12 Jupiter residential condominiums. These were built in 2010. For a total of $9.75 million, so that's about $812,500 per unit. So, nice purchase there. And then an Boca apartment complex sells for about $42 million. It's a 252-unit apartment building. The buyer is a major apartment investor called Archstone, and they renamed the property Archstone Boca Town Center. And they plan some extensive renovation to the complex. So again, we're seeing that the apartments are heating up. So good thing to see. All right, and then from the Palm Beach Post, we had talked about this a few weeks ago, about some building going on here. The Mega-Condo project has been pulled. That's right, this is the Related Group's Mega-Condo project on the north side. They were to go before the City Commission this past week and allow them to go vote, allowing them to say, yep, go ahead and build this building. But the developer, the Related Group, they decided to pull it. They felt that after the Palm Beach Post had reported that commissioners thought the project was too large and out of character with the historical backgrounds in the neighborhood, the project called for a 22 and 23-story condos with 506 total units. So they were starting to get some grief, even though they have a lot of proponents for it. They do have a few opponents that are quite vocal, and they were heavy on the phones trying to get the commissioners to not vote for it. So instead of going up for a vote and getting declined, they decided to pull it and go back to the drawing board and try to see what they can work out with the holdouts. Mayor Jerry Moyo and commissioners both expressed a strong desire to bring the project to the north side that would create jobs, but they are concerned about the project size. Now, Related is saying that they have to get 500 condos in order to make them affordable. Again, trying to get the cost value, spread out over multiple units as opposed to less units. So that could be their big problem. Now they own the land; they're sitting on it, unable to do anything with. So hopefully they'll be able to get something going here soon. It would be great to see some jobs being created out of it. All right, and from the South Florida Business Journal. Flagler Bank falls below capital requirements. Yes, the little Flagler Bank. They have a couple offices, one in downtown West Palm Beach and North Flagler, and I think in Broward. They have slipped below the well-capitalized requirements after restating its third quarter results to show a deeper loss. Yep, the $113 million asset bank originally reported in late October that it lost $757,000 in the first 9 months of 2011. On December 16th, revised that to $1.27 million. Now, for a small bank, that is a huge disparity. So now they've gone on to fall into that undercapitalized. So they fall into a total risk debt capital ratio to 9.77 on September 30th from 10.34% in their original report. So falling below 10% makes it adequately capitalized, which places restrictions on the bank's operations. The bank had reported $14.2 million in non-current loans, or 19.2% of its total loans. Ouch. That's 1 in 5 loans they're hurting over there. So they were known to be a little bit risky, so now they're paying the price. So again, that means opportunity for investors. If you're looking for something, they've got about, they're holding $4.1 million in repossessed property. So based on their total numbers, that's a big chunk. So if they need to get liquid, it might be a good time to approach them. All right, and then the Miami Dolphins. What a game. Yes, nice game even after Tony Soprano was let go. Interim coach Tony Bowles took over, and he let Reggie Bush play, which was great. Reggie Bush did awesome. He looked great. Man, he moved that ball, and Matt Moore did good. The rest of the team looked really good, so great to see them win another one. Next week, we're at New England. We did lose to them at the beginning of the season, so hopefully we can see a turnaround and put a spanking on them. Not crazy about the Pats. Anyway, all right, what's happening at the FLREIA? The Survival to Thrival Tour. That's right, I will be gone for that. I'll be with Frank McKinney from January 16th through February 8th. We will be touring the east coast of the country, going to homeless shelters and just trying to bring some, just re-inspire them to get back on their feet and know that they are just 1 foot away from making it. So looking forward to that, and I'll be missing you guys, but as you guys well showed me, you are looking forward to me leaving. So anyway, hopefully we'll be able to do the fan from while we're on location. So we'll be still coming back to you. Anyway, the Real Estate Opportunities webinar every Tuesday at 12:45. They will be canceled for the next few weeks, but we'll be back in January. So don't forget to check those out. And if you want to see the latest issue of it, you just go to 32srealty.com. All right, and then the Mastermind Breakfast is our next event on January 9th, so be sure to come out and join us for that early in the morning. Remember, members, new pricing for you guys, so check out the website for the registration. You must register to attend. No at-the-doors showing up. Elite Conference Call on January the 10th. That's at 7:30 in the morning, so it's going to be an early morning that week. And then God's Property on the 12th. That's at 7:30 in the morning as well. And then our business meeting will be January 19th, which I will not be able to attend as I will be touring the country. But Sharon will be in charge, so got to be with you during that time. But anyway, it'll be a great meeting even without me. All right, that's the news. That is the news for this week. We thank you for tuning in. We look forward to seeing you at any one of our upcoming events. Don't forget to follow us on our social media at facebook.com, twitter.com, and youtube.com, all /FLREIA. This is Juan Restrepo signing off. God bless and Merry Christmas.
The kingdom of God is within. The kingdom of God is within me. I carry it wherever I go. Got me some joy, joy, joy.